China's mainland stock market certainly has had a big move. There are a lot of factors impacting the domestic market there. I don't think we need to use that as too much of an indication. Remember, the Chinese mainland stock market bounces all over the place. Frankly, Hong Kong is probably a better place to look to get a real sense of what's happening in China. And while those stocks are maybe down 3% year to date, maybe down 13% from their peak, they're more in line with broader emerging markets, I think reflecting the concerns about the dollar rise over the last 2 months, which has really been the factor here. I'd point you to the fact that actually the Hong Kong stock market and most emerging markets were outperforming this year all the way through the middle of April. That's past a lot of the trade concerns that began with whether it was the washing machines or solar panels in January, all the way through steel and aluminum in March. It was only the mid-April rise in the dollar that began to really weigh on emerging markets. We think that rise in the dollar may soon begin to slow, with the dollar caught between opposing forces, tightening monetary policy, which has been pushing it up, balanced by looser fiscal policy, which may be pushing it back down. So maybe look for some of those losses in emerging markets to begin to fade a little bit if we can finally put some of these trade worries behind us.
Jeff, opposing current seems like a pretty good way to describe what the overall market has been in right here. Obviously, very strong corporate fundamentals. U.S. economic growth looks very good. But you had that financial tightening that you mentioned that has been capping the market and really suppressing valuations. Are we stuck here for a while, or how do you think this plays out in coming months?
Well, I can tell you in the coming weeks, it might be a little bit tough. We're entering the buyback blackout, right? So this period, 5 weeks ahead of earnings, where companies halt their buyback programs 5 weeks before, 48 hours after. And we're about 5 weeks, maybe 6 weeks away from the peak of the earnings season. So we've lost that support from corporate buying. And that may be a factor here, adding to volatility in the coming weeks.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.